Well, now let's go to Haiyan Wang. She's here with us live on set to unpack these tariffs on both sides. She's a managing partner of the China-India Institute here in washington. Welcome back.
Thank you.
So let's get right to it. The stock market didn't really seem like it was very surprised. What's your take on why?
I think that particularly U.S. Stock market has been on the rise, prompted up primarily by the good job data and by the momentum of technology sector. And corporate earnings are strong, and unemployment has been coming down to, I think, 17 years low.
Right.
So right now the economic momentum is very strong for the U.S. While the impact on the Chinese stock market, however, has not been this good. True. And the Chinese stock market has seen consecutive going down for 7-8 weeks by now. Some are related to trade wars, some are more domestic economic issues.
Let's just back up for a moment and put this in perspective. This first round is $34 billion on each side. That's not a lot when you think about the trade relationship between these two countries. Are we even going to feel the impact until we get the second and third and fourth tranche of this, if it continues?
If it would go down that route, I mean, even with 50 billion, tariffs on 50 billion, we probably won't feel much. However, President Trump has threatened that it could go, threaten at 200 billion and another 300 billion. If it comes down to hundreds of billions of dollars, then I think that the industrial companies, consumers, and farmers could all feel the impact. The hope is that at some point, that perhaps by the end of the summer, before the fall comes in, then there could be a compromise, a middle ground, and an agreement made. So we won't go that escalation route, because lifting up the big stones sometimes end up dropping on your own feet, and it really hurts. It is.
But who blinks first? I mean, Beijing is making the calculation that the politics of where their tariffs are hitting is going to affect President Trump and his party. President Trump seems to be calculating that he can get China to come back to the table, even though he drove them away from the table initially by not taking up their offer, with a combination of economic pressure through their stock market and through some of their industries. Who do you think is going to blink first here?
Well, I think that in public, everybody seems to be pretty tough, and because they have to strong-faced. I think that they may blink, behind or in a back room that we don't really know. I don't think that either side wants the trade tension to escalate. For the U.S., there is conflicting interest from different voting districts. You have industrial companies that actually suffer despite the tariffs on a lot of the industrial products, because they rely on the components, industrial components. So I don't think that eventually some sensible economists and business groups will come to realize that we can't just look at bilateral trade. We have to look at the global trade for the U.S. For example, how is this going to do really to the jobs picture? How is this going to really affect U.S.'s global trade deficit? As I look at the trade numbers, if you look at the net exports for the U.S. as a percentage of GDP, it has maintained quite stable at about 2.7% for the last 2 decades. For China, the net exports as percentage of GDP has actually coming down from the peak of nearly 9% prior to a financial crisis in 2006, down to about 2%. That means that China has undertaken structural adjustment. So China's economy is much less export-driven than in the U.S. or in the prior financial crisis. So I think that that China can bear some of that short-term impact. Let's hope that it's not going to create too much uncertainties, because that's going to impact investment growth, and that will hurt.
And in terms of when we see an impact on jobs, I mean, both of these countries have a tremendous number of jobs on the line when it comes to international trade. I know on the U.S. side, it's 41 million jobs. So these are significant numbers.
Yes, significant numbers in terms of the trade tariffs. Short-term wise, China probably lose more jobs, because the export sectors is more labor-intensive than the U.S. export sectors. Agricultural products, even though it affects the farmers, but it's so mercantilized. So there's a lot of agricultural machineries and plowing the field and harvesting the products. However, I think that because U.S. is not one voice. Different constituents, different industries, different associations, they're all going to lobby hard. And at some point, the stock market is going to feel the impact. And that is going to affect a lot of the investment accounts, including a lot of average Americans' retirement funds. That is going to hurt at some point. Hopefully, it won't come to that pain.
Unfortunately, we're going to have to leave it there. Haiyan Wang, let's have you back again soon, please. Good to have you.
Good to be here.